The Earth has shifted. A tectonic realignment in global trade is underway. China, the world's manufacturing behemoth, is pivoting away from the United States. The implications for the American economy are profound and far-reaching. For decades, China has been a voracious consumer of American goods, from soybeans to software. But no more. In a stunning reversal, China is now increasingly looking to Canada and the European Union for its imports. This shift is not a temporary blip. It is a seismic change with the potential to reshape the global economic order. The reasons for China's dramatic move are complex, but one factor looms large: the trade war initiated by former President Donald Trump. Trump's tariffs on Chinese goods intended to protect American jobs backfired spectacularly. They pushed China into the arms of other willing trading partners. This is a story of unintended consequences, of hubris and miscalculation. It is a story that underscores the interconnectedness of the global economy and the perils of protectionism. And it is a story that is still being written. The impact of China's trade shift is being felt most acutely in the American heartland. Farmers, once the backbone of the U.S. economy, are reeling. China was once the largest export market for American agricultural products. Now those markets are drying up. Soybeans, the golden bean that fueled the rise of American agriculture, are piling up in silos. Wheat fields stand empty, unsown, and unwanted. The Trump administration's tariffs on Chinese goods triggered retaliatory tariffs on American farm products. This trade war dealt a body blow to American agriculture. The pain is real, and it is widespread. Farmers are facing foreclosures, bankruptcies, and a loss of livelihood. Rural communities are struggling to cope with the economic fallout. The American heartland, once a symbol of prosperity and self-reliance, is now a land of uncertainty and despair. The Trump administration's attempts to compensate farmers for their losses through subsidies and bailouts have proven to be insufficient. The damage has been done. The question now is whether American agriculture can recover from this self-inflicted wound. The shale revolution promised America energy independence. But China's trade shift is casting a long shadow over that dream. China is turning to Canada and the EU for its energy needs. Canada, with its vast oil sands and natural gas reserves, is emerging as a major energy supplier to China. The EU, meanwhile, is ramping up its exports of renewable energy technology. American energy producers are being left out in the cold. The Trump administration's withdrawal from the Paris Climate Agreement and its rollback of environmental regulations did little to boost American competitiveness. In fact, they may have hampered it. China is increasingly focused on securing clean and sustainable energy sources. The United States, once poised to become a global energy superpower, is now at a crossroads. It can either embrace the clean energy future or cling to the fossil fuels of the past. The choice is clear, but the political will to make it is uncertain. Silicon Valley, the epicenter of American innovation, is not immune to the fallout from China's trade shift. Chinese tech giants, once eager consumers of American semiconductors and software, are now looking elsewhere. The Trump administration's blacklisting of Huawei, the Chinese telecommunications giant, sent shockwaves through the global tech industry. It also accelerated China's drive to achieve technological self-sufficiency. China is investing heavily in domestic chip manufacturing and software development. The United States, while still a technological powerhouse, is facing a new reality. China is no longer content to be a passive consumer of American technology. It wants to be a peer competitor, if not a leader. The battle for technological supremacy is heating up. Silicon Valley is feeling the heat. The days of unfettered access to the Chinese market are over. American tech companies must now adapt to a world in which China is both a competitor and a potential adversary. Section 5. Trump's Tariff Boomerang. The trade war was a gamble, a high-stakes bet that backfired spectacularly. The tariffs imposed by the Trump administration on Chinese goods were supposed to protect American jobs and reduce the trade deficit. Instead, they had the opposite effect. The tariffs raised prices for American consumers and businesses. They disrupted supply chains, creating uncertainty and chaos, and they prompted China to retaliate with tariffs of its own, targeting key American industries like agriculture and manufacturing. The result was a lose-lose situation for both countries. The trade war hurt economic growth, cost jobs, and inflamed tensions between the world's two largest economies. It was, a classic case of shooting oneself in the foot. The Trump administration's trade policies were based on a flawed premise, that trade is a zero-sum game in which one country's gain is another country's loss. This mercantilist view of trade ignores the benefits of comparative advantage and the gains from trade that accrue to all parties involved. Section 6. Canada's windfall, a northern star rises. While the United States grapples with the fallout from the trade war, Canada is reaping the benefits. China's insatiable appetite for raw materials and agricultural products has turned Canada into an economic powerhouse. Canadian farmers are struggling to keep up with the demand for soybeans, canola, and other crops. Energy companies are ramping up production of oil and natural gas to meet China's energy needs. And Canadian manufacturers are seeing a surge in orders for everything from lumber to machinery. Canada's economy is booming thanks in large part to its growing trade relationship with China. The Canadian dollar has strengthened, unemployment is low, and the government is flush with cash. Canada is the envy of the developed world. But Canada's good fortune is not without its challenges. The country is grappling with how to manage its newfound wealth and prosperity. There are concerns about Dutch disease, a phenomenon in which a booming natural resource sector crowds out other industries. Section 7. Europe's feast, from farm to fork. Europe is another big winner in the China trade shakeup. European farmers are filling the void left by American agriculture, shipping record quantities of wheat, pork, and other foodstuffs to China. European manufacturers are also benefiting from increased demand for machinery, automobiles, and other goods. The EU has been quick to capitalize on China's shift away from American products, signing new trade deals and strengthening existing economic ties. The EU's success in securing a larger share of the Chinese market is a testament to its commitment to free trade and its willingness to engage with China on its own terms. The EU has not shied away from addressing thorny issues like human rights and intellectual property theft, but has done so within the context of a broader economic partnership. The EU's pragmatic approach to China stands in stark contrast to the Trump administration's confrontational stance. The EU recognizes that China is both a competitor and a partner, and that engagement is essential to advancing its own economic interests. Section 8. The Green Energy Wildcard. Amidst the geopolitical maneuvering and economic realignments, a new wildcard has emerged: green energy. China, despite its reliance on coal, is also the world's largest investor in renewable energy. As China seeks to reduce its dependence on foreign energy sources and combat air pollution, it is looking to countries like Canada and those in the EU with strong green energy credentials. Canada, with its vast hydroelectric resources and potential for wind and solar power, is well positioned to become a major supplier of clean energy to China. The EU, meanwhile, is a leader in green technologies such as solar panels, wind turbines, and electric vehicles. European companies are already major players in the Chinese renewable energy market. This shift towards green energy presents both challenges and opportunities for the United States. The challenge is that the US risks being left behind in the global race to dominate the clean energy technologies of the future. The opportunity is that the US can still reassert its leadership in this critical sector by investing in research and development, promoting innovation, and creating a more favorable regulatory environment for green businesses. Section 9. A New World Order. The tectonic plates of global trade have shifted. China's pivot away from the United States is a watershed moment in economic history. It marks the end of an era in which the US was the undisputed center of the global economy. The rise of China, coupled with the relative decline of the US, has created a more multipolar world. Power is shifting from west to east, from north to south. New centers of economic and geopolitical gravity are emerging. The US is no longer the sole superpower calling the shots. It must now contend with a more assertive China, a resurgent Russia, and a host of other regional powers. The rules-based international order that the US helped to create is under strain. The future is uncertain, but one thing is clear: the world is changing, and the US must adapt or risk being left behind. The era of American hegemony is over. The era of multipolarity has begun.